What exactly is a stock screener? A stock screener is a software tool for evaluating large batches of stocks using filter criteria. It is an efficient means to quickly survey the stock market landscape for investment opportunities. Filter criteria can include many forms of current and historical corporate data, price performance, and even analyst ratings. Filter criteria are additive. That is, for a stock to make it through the screening process, it must pass through all of the filters. We'll do a demonstration exercise in a few minutes. Stock screener tools can be found free online. They vary in robustness. Many brokerage firms offer stock screeners as part of the account package. Charles Schwab and Fidelity Investments are two examples of having extensive and sophisticated stock screeners. Another alternative is for a person to create a stock screener using software and web services. Stock screeners are powerful and offer many advantages. First, they are fast. Thousands of stocks can be evaluated against a selected criteria in seconds or less. Second, they are objective. Stocks are evaluated solely on the filters being used. There are no preconceived biases by the user. There is no hype coming from a media pundit. Third, quite often a stock screener will produce unexpected results. Suddenly a stock, completely off the radar, shows up on the results list, and then things get exciting and fun. Fourth, users can specify multiple filter criteria depending on their investment direction. The user is free to develop investment strategies meeting their needs. The criteria can be very specific. Lastly, filter criteria can be saved and the screening process rerun periodically. This is highly efficient and productive. All of the investor's knowledge and strategies are encapsulated in a process that takes a second to execute. It is very powerful. Even though stock screening is fast, there is a recommended process involved. First, run the stock screener with the selected filter criteria. Review the results list and choose 2 or 3 stocks for further consideration. The various filter criteria values will be presented so that the list can be resorted. The next step is to read analyst reviews regarding the stock. This will provide a broader viewpoint and additional information. Reviews summarize current corporate activities such as mergers and acquisitions, new products, regulatory proceedings, cash flow, and leadership changes. Next, consider secondary tiebreaker metrics not included in the first filter pass. Perhaps one stock has a better upside than others, or perhaps one stock has significant debt, and so on. There are numerous tiebreaker possibilities. Last, make an investment choice. This process is much different than first hearing about a hot stock from a TV guest or advice from an internet friend. This process starts by first incorporating selection data that reflects the investor's strategy into the selection process. It is objective. Then, the investor can do further analysis. The correct metrics are in place right from the start. Now we are going to do a little exercise using real data. We are going to use the Charles Schwab stock screener that is included in the account package. Again, other brokerage companies have stock screeners. For example, Fidelity Investments has a very robust stock screener. The viewer is encouraged to look at various products. For our exercise, we are going to use several filter criteria. The goal is to invest in stocks that will create a passive income stream. The stock should be fairly valued price-wise and provide a consistent return on investment. The focus of the exercise is on the pharmaceutical industry. It's a good idea to be industry-focused and become acquainted with companies in the sector. Regulations are industry-related. Companies in a sector have similar debt structures. They have similar types of products. Therefore, the final results list will make for better comparisons for investment purposes. The dividend yield should be greater than 3%. The dividend growth over the last 3 years should be greater than 3%. The price-earnings ratio over the trailing 12 months should be less than 30. The lower, the better. Several other filter criteria could be added, but these 4 are sufficient to demonstrate the process. Filter criteria can be very complex depending upon investment strategies. Let's be clear. The results from this exercise do not constitute a recommendation for any of the stocks listed or seen by the viewer. It is the sole responsibility of the investor to make a decision on which stocks to buy. This exercise is meant only to demonstrate how a stock screener functions and the features thereof. The results from this exercise are from March 27, 2024, and are not valid on any other day. Stock market and macroeconomic conditions change quickly. Stock prices change by the second. You will need to run your stock screener when you want to invest to get fresh and timely results. This is how the Charles Schwab stock screener is accessed. The user selects Research and then Research Tools to get to the stock screener option. You can expect other user interfaces to provide a research option somewhere. Therefore, try looking for the stock screener that way. Notice the words. Use your own criteria or a predefined screen to find stocks that match your investing goals. That is exactly what we want to do. Now we are in the Charles Schwab stock screener. Criteria filters are listed on the left-hand side of the screen. I won't go into all of them as they are too numerous. You, the viewer, can explore them in your stock screener. Let's say that the options are robust and your selections depend on your investing goals. Beginning our exercise, we navigate to sectors and industries. Selecting that option presents numerous industry choices. Pharmaceuticals are found under Healthcare. We select it. Interestingly, we see there are many sub-industries of which pharmaceuticals is one. Please note the number 2003 in the upper right-hand corner. That is the number of stocks in the healthcare industries. Next, we deselect all of the options except for pharmaceuticals. There are now 465 stocks remaining in our filtering exercise. Next, out of the 465 stocks, we want to find stocks that have a dividend yield of greater than 3%. In the dividend area of the stock screener, we choose Annual Dividend Yield. This presents value options at the bottom of the screen. We select the options 3 to 4% and above. This additional filter reduces the list to 23 stocks. The next filter criteria is a dividend growth greater than 3% for the last 3 years. We select all of the option values except for less than 0%. This filter further reduces the list to 6 stocks. The last filter we are using is a price-earnings ratio of less than 30 for the trailing 12 months. We are seeking good value with our selection, and lower is better. Selecting the value options less than 30 results in 3 remaining stocks for consideration. This is the result screen from applying the additive filter criteria. Only 3 stocks are remaining out of 465 pharmaceuticals. In seconds, we have narrowed down the candidates to just a few for further work, such as reading analyst reports and current news. It is well to gather additional opinions before investing. The complete filtering process can be saved so that the next time all you need to do is to select your named filter. It will deliver results in about 1 second. You can rerun the stock screener periodically, looking for new investing opportunities that meet your criteria. I hope this exercise was informative and helpful. Please consider our new book, The Income Investor. Give yourself a raise every month. It is about creating a solid, reliable, and growing income stream through proven processes you can repeat again and again. It is based on the most fundamental financial metrics. The Income Investor is available now on Amazon.com. Scan the QR code on this screen using your mobile phone to get to the book's Amazon page. It is available in soft copy and Kindle for a modest price.